Hello friends, welcome back to the show. Recently, at a special general body meeting of a cooperative society, a member came up with the proposition that the society should consider the offer of Saraswat Cooperative Bank, which was giving a return of 10% per annum on a specific investment instrument. The instrument of investment referred to was the Saraswat Bank Long-Term Subordinated Bond Series 8 2022-2023. Let's take a look at this offer in some detail. The society has nearly 7 crores in long-term investments, and the current rate of interest is in fact less than 6%. A quick back-of-the-envelope calculation shows that a 4% higher interest rate would yield an additional pre-tax return of 28 lakhs, and after paying the taxes, it would work out to more than 21 lakhs. That's equal to the township maintenance bill that we pay every year, including GST. So what exactly is stopping us? What you can see on the screen now is a snapshot of the title of the offered document, and it can be viewed on the URL, which is pasted just below that. As you can see, this has been described as a lower tier 2 capital bond. We shall see more of this shortly. Here are the salient features of this instrument of investment. You require a minimum investment of just 50,000 rupees and in multiples of 25,000 thereafter. It has a lock-in period of 120 months or 10 years. In other words, you cannot redeem this before 10 years are completed. And the interest is paid out quarterly at the rate of 10% per annum. Now let us get to the fine print. As mentioned earlier, it is a Tier 2 capital bond. The offer document also states that it is not a normal deposit. Further, the redemption is subject to bank's capital to risk ratio, or the CRAR ratio, being above that which is prescribed by the Reserve Bank of India at the time of redemption. For those of us who are not very familiar with acronyms, CRAR ratio stands for Capital to Risk Weighted Asset Ratio. So that is the technical bit which we must be familiar with. Since this long-term subordinate bond, or the LTSB, is not a deposit, it is not eligible for insurance cover from the Deposit Insurance and Credit Guarantee Corporation, or the DICGC. On the other hand, your fixed deposits are insured under this scheme. Now let us see what the Section 70 of Maharashtra Cooperative Societies Act of 1960 say about investing or depositing society funds. Such funds or deposits can be made with a central bank or a state cooperative bank. Also, it can be put in securities which are specified in Section 20 of Indian Trust Act 1882. Further, it can also be invested in shares and bonds of other societies, provided those societies are of the same class as the parent society. Also, it can be put in any other cooperative bank not covered under para A above. Also, it says that there are other modes permitted by a special or a general order. So what we are looking at in essence is securities specified in Section 20 and other modes which are permitted with special or general order. Let us explore that in the next slide. Now here is the relevant notification of Government of India's Finance Ministry as it relates to investments and deposits under Section 20 of Indian Trust Act. It expressly states that only Tier 1 bonds issued by scheduled commercial banks under guidelines issued by the Reserve Bank of India, which are either listed or are proposed to be listed on an exchange. Please mark these words. They ought to be Tier 1 bonds and they ought to be proposed or already listed on an exchange. The Saraswat long-term capital gains bond is disqualified on both these counts. So friends, the verdict is that Since this is not a Tier 1 bond, hence it is not allowed under Section 20 of the Indian Trusts Act 1882. Also, it is not allowed under Section 70 of the MCS Act 1960. In other words, the society cannot even think of considering this option. So friends, that brings me to the end of this video. Thank you very much for your attention, and it's bye-bye till we meet once again in another video. Thank you.